Welcome back. 3907. So we are still holding a little bit of an up move. A few stocks are darting around all over the place. Crude has cooled down to 138, 139. The reason why KN has taken a little bit of a hit, not a little bit, more than 4% down on KN. That stock down to 225. Metals are still a little challenged. Nalco is down 3% in today's trade, and that's been one of the strongest stocks in that pack. Sterlite is down as well, marginally in the red. And a few other large cap names like NTPC and ABB haven't exactly done very well this morning. Ranbaxy is your star, but in the mid-cap space things are okay. Just 0.5% up the mid-cap index, and the breadth is just okay, 2-for-1 advanced decline ratio. So you're not getting a table thumping kind of sense right now, but at least that dead cat bounce is on for the first half an hour of trade. Devesh Kumar of Centrum now joins me to talk about the markets. Devesh, what's your take now after observing all that's happened in June and July? Where do you think things are headed from here?
I think today also the panic or sense of fear that is very much prevalent, and this is explained in the high level of cash that lots of funds and lots of individuals are sitting on. So people have money, but they don't want to put it in the market, fearing that probably they may get further hammered, and if they buy today, then mark-to-market basis, they may suffer some more pain. But what we feel is, if I look at current domestic situation, then I think all worst fears, they are priced in. And today we are suffering because of transmission of global pain into India as well. And I think oil is going to be a very critical factor there, where we feel that forecasting next 10 days price will be tough. But based on previous 10 days movements, it clearly comes out that I think I think on the margin traders, they are calling shots today, and probably we are close to peak, and breaching 150 levels will be tough in the near term. And 150 is what we have in price today, and therefore a sense of relief will come as we see oil cracking from here and moving towards 120 to 100 mark. And I think over the next 12 months, I'll not be surprised if oil is at 100 to 120. So if I look at Indian economy, macro side, worst case fears are that GDP growth may come down to 6.5%, and over next 2 years, best case scenario is it will go up to 9%. So broadly, macro side growth number is not going to give too much of concern. Then sectoral composition, that is what one comes to, and then other headline numbers of inflation, interest rate, and balance of payment side. So with oil easing, with the chances of Reliance and Cairn Energy gas meeting a lot of our energy demand in the next 12 months, we feel that pressure on balance of trade and current account will reduce significantly. And whatever worse outflows from FII, that I think we have seen, I don't think it is going to become worse from these levels. And in next 12-month perspective, once political stability is restored and elections are behind us, I think on FDI front there will be a good amount of money coming in. So what I'm saying is, on external front, on currency, probably in near term we may see 45, 47 levels, but over 12 months currency is going to again strengthen. Inflation, I think Reserve Bank has succeeded in reducing our growth numbers. Industrial growth has suffered without being able to handle inflation part, because inflation is global in nature. And I hope very soon we focus on growth, and so as we move towards 9%, that concern also gets addressed. So overall, I'm saying that if one takes a 1 to 2 year view, then things are going to look much better from current levels, and therefore in the given headline numbers situation, one has to pick winners. What we feel is, at current juncture, all interest rate sensitive sectors and companies, that should be avoided. Therefore, in reality, there could be some more pain wherever I think companies, they have cash flow issues. Because if you look at net asset value, you may find them very cheap. But I think right now they are going to face cash flow issues, and that's where the stocks will come under pressure there. So automobiles, I think two-wheelers, people may move down to two-wheelers, and two-wheeler sales may not suffer, but I think four-wheelers and other automobile stocks, there will be some more pain. And the stocks which look very attractive are cement, FMCG, technology, and I think banks are also overbeaten, and one can have some picks in banking sector as well.
You're saying that this bear market is about to end now, Devesh, because in our history we haven't had 6 to 8 month bear markets, if we are in one right now.
See, I feel that this bearish sentiment will come to an end once news flow becomes positive. Fundamentals, they have been forgotten today, and any bad news that creates bigger impact than any fundamentally sound news or sound development. So what I am saying is, in next 2 to 3 months, we will find that market will try to stabilize, and if you take 1 to 2 year view, then I think there are handsome returns awaiting, whether you invest in small cap, mid cap, large cap. In the near term, I think probably large caps are where you'll find a bounce sooner. But I'll advise investors to avoid investing for 6 months, because in 6 months news flow could become slightly bad, and market may remain at current levels, or stocks may fall 5 to 10% more from here. But if you are taking a 1 to 2 year call, then chances of getting 35–40% returns from current levels is looking highly probable.
Thanks, Devesh. On that optimistic note, we'll thank you. When we come back after